markets, it's different or difficult to understand exactly how they're positioned, because if you look at traders in fixed income, it's different to equities. Where do you see the biggest market dislocation right now?
Well, the strange thing is that we, in my mind, haven't got a very big location, because if you had told me, laid out the events, I would have thought the market should be down a lot. And indeed, it's actually up on the year. I think that's quite surprising.
Yeah, it's up, it's down. I mean, does this angst not come to fruition? I mean, we look at inflation, even the latest figures from Europe. Inflation could be a worry, and yet actually equities choose not to see that.
Yeah, no, I think it's remarkable, because based on what's going on in the Middle East, you would expect this to feed through, higher energy prices, higher food prices, fertilizer prices, and so on. It is, to a certain extent, starting to hit Asia. We should expect it to hit Europe and the US through higher prices, and typically that is bad for the markets. But the market is really taking it in stride.
Do you worry about inflation expectations, and the fact that there could be some kind of policy mistake from central banks?
Yeah, inflation is what typically gets the markets, and so that's something we really have to watch. On the other side, we have artificial intelligence and what we think is a deflationary effect, and I think that is what the market is kind of penciling in just now.
Do you have question marks about artificial intelligence? Again, there's so much capex going on there that as soon as there's a little bit of a wobble, like we saw with the OpenAI, the market is very concerned.
Oh, absolutely. Lots of capital going in there. Now, we are basing our view on how we are using it ourselves and the effect that we are seeing on our business. We think we have taken out nearly 20% productivity gain just over the last year. We are using it to help us reduce trading costs. So it's a huge benefit for us, and we are putting it in everywhere we can. Now, whether that's now more than reflected in share prices of these companies, I think is very, very difficult to say. Yeah. If it's a bubble, I think it's a pretty good one.
Yeah, how do you say? I mean, I guess the bubble is fine as long as, until the point it bursts.
So. Well, that's true, but it's also pulling in a lot of capital into infrastructure projects, data centers, and so on, and building capacity that we do need to implement AI in society.
Nicolai, I mean, you said on a massive fund, right? It's 2.2 trillion. Is that an asset or is sometimes a disadvantage?
No, I would say what's, well, first of all, that amount of money is for sure an asset. When a fund is that big, you need to just think a bit differently about how it's positioned, and you need to have a very strict mandate, and we have a very good one from the Ministry of Finance, which basically explains to us how we should be invested. Pretty accurate guidelines for what we should be doing, and I actually think in this environment, it's easier to invest in the market, to be part of the market, than actually picking individual companies and sectors.
But do you sometimes feel, I mean, you can't really move as quickly, and again, is that a good thing or a bad thing? If
well,
you have
it depends.
Something so big like the Middle East.
So it depends. Sometimes it's good to be able to move, sometimes it's good not to be able to move. And if you look at the volatility we've had so far this year, well, I mean, the fund is up several percentage points this year. I think if you had been able to move as much as you wanted to, perhaps you would have made some stupid decisions.
I mean, does that go to, I guess, investors' anxiousness that people maybe sometimes move too quickly? I don't know. How do you perceive risk and risk-taking in markets?
Normally people move too much. There is something called an inertia analysis, and that means that you basically look at your results, what they would have been like if you had just kept your portfolio from the beginning of the year and not done anything. And then you look at your actual results. Very many people subtract performance by moving things around too much. So sitting still is sometimes the most difficult thing to do.
Especially in volatile periods?
Absolutely.
How volatile do you think this period is and will stay?
No, I would say it's not, I would say it's kind of medium volatile. It moves on policy decisions, it moves on geopolitics, it moves on uncertainty, it moves on wars, it moves on energy prices, it moves a lot basically.
Do you have to take a view on what happens in the Middle East? Because again, it's very difficult, and a lot of the market positioning was towards something optimistic, where actually if you look at the geopolitics, there was no real end in sight or even a way to go down a notch.
Yeah, it's a very complex situation we have in the Middle East now, and I think the outcome there is very uncertain.
Nicolai, talk to me a little bit about this idea that AI is disinflationary.
Well, we are seeing the productivity gains from this. You can do things with fewer people. You can automate more things. I think there are a lot of jobs which are going to disappear. Do we need as many lawyers going forward? Probably not. Do we need as many accountants? Probably not. Do we need as many consultants? Probably not. Now, is that going to make the world a worse place or a better place? Perhaps even a better place. And I think also we can stop doing things which are repetitive, which are boring, and we can just spend more time thinking.
But does that show up at what point does it actually show in the inflation numbers? Because we're just at the cusp on maybe in certain points in inflation seeing it, but it's not widespread enough in the economy.
No, it's not widespread because we have the offsetting effect, which is from the energy market on the back of what's going on in the Middle East. So we have these two intersections and two effects coming together.
I mean, is that why it's hard? It's because you actually have two opposing things, and central banks also have to make a decision on that.
Yeah.
So again, as an investor, how do these two tensions play out?
Well, the way we deal with it as an investor is to be broadly diversified and very long-term in our thinking. And I think that's a pretty good place to be just now.
What's your take on private markets?
On the private market, so we are actually not in the private market.
And that's in the statute. I mean, you can't, right?
We cannot be in the private market, but we do observe the private market. We look at it. We are seeing some signs of worry there, some early signs of stress. I think if rates went up a lot and we had an economic downturn, that probably would crystallize more of it. But I think it remains to be seen.
Is there a worry that it's something systemic? Is there something in the private markets that makes you worry about your investments?
No, we don't have any reason to believe that there's anything systemic, but for sure there could be losses that people had not expected.
Such as?
We'll see when rates go up. If rates go up and we have an economic downturn, that's typically when you see whether people have the right types of credit.
So what's the next 4 to 5 months that are particularly crucial if the price of oil stays at this level?
Well, I don't know when we potentially will see these type of effects, but when they happen, we for sure will see who has written good credit.
How do you see ESG going forward?
Well, we think it's important that companies continue to be sustainable in the way they do business, and the reason why we argue that is because it makes sense from a financial standpoint. If you don't have a sustainable business, it's going to be a bad investment. If you don't have a sustainable business, you're not going to get people working there. You're not going to get bank loans, insurance, or anything like that. So we are consistent in our view, but we always make sure that it boils down to financial considerations. It's important because those type of risks are financial of nature.
Where do you think we are worldwide on this? Does the energy crisis in the Middle East make it more likely that there's more investment and money being poured into ESG as we find other sources, or is that actually just securing the old way of finding energy?
Well, I think we are seeing it in several different ways. One, of course, would be a continuation of fossil fuel and exploration. We are seeing some reversion back to coal. We are seeing an acceleration potentially in nuclear, but we are also seeing a rally in renewable infrastructure, which is a very positive development. And we think some of the investments in that field look really interesting. Anything
on real estate that you worry about or actually you're excited about?
Well, we have big real estate investments around the world. We have nearly 1,000 properties. The real estate market has been not great over the last few years, starting with COVID, some banking issues, rates, and so on. We think it looks more attractive now than in the past.
Nicolai, I'm a big fan of your podcast, and on it, actually, you speak to incredible people, and you talk a lot about optimism and pessimism, and the fact that psychology kind of also changes the investment attitude. Where are we in 2026? We had COVID, we had the war in Ukraine, then you have the tariff liberation day, and now you have the Middle East. Are people broken?
No, I don't think they are broken, and I think it depends very much from person to person. I think we are probably medium to negative on the sentiment scale. We probably should be more positive because there are a lot of positive factors going on in the world, in particular, AI and so on. But of course, people are worried when they see policy decisions which they don't understand, when they see war when they see geopolitical events which they hadn't expected. It's a tough landscape to navigate.
Could that
I think it's interesting because in the past, I think you needed to look through the world either through a microscope or a telescope. Now, I think you need to look through a kaleidoscope, because, one of these things you had when you were little and you turn this thing and suddenly all the shapes changed. That's the way the world is like now. Many things are being turned upside down. You see new shapes, new colors every day. And you need to look at the world in a much more broader fashion than you did before.
But that means more risks, doesn't it, for investors, but also for consumers? Do you worry that consumers may stop consuming as much as they did even in the US,
I don't think
capex?
I don't think you'll ever get consumers to stop consuming. They may change their habits for a little while, but we need things and we will want to buy things.
But if you look through a kaleidoscope, what changes fundamentally? Is it capex? Is it M&A?
Well, I think if you look through the kaleidoscope, everything is changing, right? Just over the last few years, you have a difference in geopolitical tension between the superpowers. You've had the new aspect of technology. You have China becoming much more competitive in many more different industries. Now, we are coming out with a podcast in a couple of weeks with Pfizer. They talk about, the cancer research in China being very, very strong. Some of these factors are new. You see the development on the battery front coming out of Chinese companies. Incredible. You see Xiaomi. We did a podcast with them. Wow, they go from a mobile telephone to a supercar in 3 years, And so the type of speed and development and innovation coming out of China is unreal.
How will that impact your portfolio going forward, like much longer term?
No, I think you'll see the impact on, we are invested in China. It's not a very big market for us, but we have investments in these companies. Of course, it's going to be problematic for some of the European competitors. It's a tough landscape to navigate.
But for the moment, you're committed to AI in the U.S. There's not. We don't really know if China takes over the AI race.
Well, the way we read it and what we hear from the companies is that they are very good at applying it. So maybe slightly behind in terms of developing the models, but in terms of applying it and using it in everyday life, they are doing really, really well. And I kind of think that's Europe's opportunity as well. We don't have the big language models here, but we could become really good at applying it because we are educated and we are very digital.